In this video, guys, we're going to look at how bigger picture thinking equals better trades. Stay tuned. Hey guys, a very warm welcome to you. All right, so I've got a little bit of a quiz for you. Not really a quiz, but hey, let's go for it. We've got two charts here in front of you. I've got chart A, okay, and I've got chart B. Now this is, as you would probably agree, a support level. And let's say, for example, for whatever reason, it's at 50. Assume that it's some sort of currency pair and these are the last two digits. And this is all the information we've got so far. The price has touched it once, touched it again, and it's about to touch it. Touched it once, touched it again. Completely identical charts, identical price. Everything is identical. Now, which one is going to hold? Right? You don't know, because all you see is these two things. And if you're just trading support, you'd probably say, well, they're identical, so they're both going to hold. So what about if I added some more information to it? Because a lot of people would say, well, that's all I need. I just need a support level and prices touching support. I'm going to buy the support trade. And this is where I feel that bigger picture thinking equals better trades. Because many traders have a real kind of myopic, laser focused vision, and they don't expand their vision to how price has reacted and what's happened before. Now, many people argue and say, it doesn't matter what price has done before. It doesn't matter. It's irrelevant. It's just a price touching support. I fundamentally disagree. And let me show you why. Now, which would you prefer to take if I drew this for you? This one, B, has driven aggressively, and let's even extend it down. Let's extend the axis. Imagine that was lower. I didn't draw it long enough, but imagine it was. Driven aggressively through this level and has now touched that level twice, versus this one that's come down and is touching this level after being in a downtrend. Notice the distinct difference, well, the obvious difference. One has come from the highs and has pushed the lows and has tagged that support. The other has come through the level already and is now coming back and is retesting it. Now we've completely changed the scenario, haven't we? Because this is a downtrend, so we've already got longs against us because we're fighting against the trend. Now, could it still hold? Yes, it could. But look at this one. Strength behind us. We're in an uptrend. If we align ourselves with the strong nature and the direction of the trend, we're already aligned on the buy side, and we've now shown evidence that there's some sort of support in the upper, whatever that is, 10th or 20th of the, or 20% of the range, and we've found some support. The likelihood that this holds more than this, I haven't got the statistics to back this up. I've just got real world experience, guys. And that is way more likely to hold under the right conditions, i.e. we've got a strong trend, the wind's behind us, everything else, we haven't overextended ourselves, we're open, there's some sort of catalyst, all these kind of things that I cover separately. Regardless of that, this is far, far more likely to be a decent support level to work off. This, especially if we've come down from highs and we've slammed into this and we've just found this, is far more likely to break through. Now, of course, there are exceptions when this thing will hold, maybe it'll fake through and dip back up, and that's a different type of trade. But looking at this and saying, hey, what's the bigger picture? How has price actually got to this level in the first place? What's it done to get to there? Because I believe that a lot of traders mistakenly just go, okay, I'm just looking at this. I'm just looking at this. It's support, it's 50, it's the same, but are forgetting the bigger picture. And yes, the obvious one is, okay, well, it's already broken through that level, so maybe resistance becomes support. But in this case, it wasn't even resistance in the first place. It had just gone up and then come back and found support on its way down after going through some of it. It wasn't like we'd tested there and we'd kind of had this scenario, you know, where we've done that and we've had, you know, resistance now becomes support. It wasn't that, so you can't even argue that. So the point of this video, guys, is just think of the bigger picture. You know, when you're looking at these individual levels, it could be resistance as well, support and resistance. It's important to take into account how they've been approached, the time of the day of the week, all these other things that have, there's probably 20 or so parameters that make up, some of them are more useful than others, that make up how useful that is. And it becomes a completely separate trade. And I think that too many people say, well, it's the same trade because it's buying a support. And there's a lot of difference. There's a lot of difference, as we've just gone over. Don't repeat ourselves, we've gone over it. The strength of the market, pushing up, you're aligning with the trend, etc., etc. This, you're trying to pick a bottom. Yes, it's stalled once, but it's a downtrend. The likelihood is in a downtrend, probability shows the next move will be this. That's just a pullback in a downtrend. Trying to pick a double bottom in a downtrend, the right kind of aggressive downtrend, is a challenging and pretty much negative expectancy trading strategy. So think about it, guys. Think about your support, think your resistance, think about for your flags, think about all these kind of things. That bigger picture thinking generally equals better trades. Take care, whatever you're doing, and keep your risk managed. Bye bye.